I say you're correct. Economists disagree and get a lot of things wrong. However, generally speaking, I think the consensus is that inflation is always and everywhere a money phenomenon, and I'd argue credit. Money and credit creation is what drives inflation. Therefore, by definition, tariffs cannot be inflationary. They are a price level adjustment in absolute terms, but you only get inflation if monetary policy is excessively easy. And that's where I would leave it. And that's, to me, what makes the most sense. And by the way, the Fed, by its own admission, when it did a study back in September 18, talked about a 10% across the board tariff as basically being a modest one-off price level change. So that's how I see things playing out. If there are tariffs, which I expect, they will not impact the inflation rate.
I want to turn to tax cuts finally here, because the president has also talked about the tax cuts being paid for in part by the tariffs.